Yvonne, have a look at the business news now. Charles Pellegrin is with us here on set. He's starting in Beijing. Xi Jinping, giving a speech at the China-Africa summit, made a financial pledge to the continent, didn't he?
That's right, Stuart. The Chinese president promised 360 billion yuan in fresh financing over the next 3 years. That's about 45 billion euros, a level higher than at the previous summit 3 years ago, but lower than the 2018 summit. This will come in the form of 210 billion yuan of credit lines, 70 billion yuan investment from Chinese companies, and the rest coming in various forms of assistance, like military aid. Xi said China was ready to launch 30 clean energy projects on the continent to help it get out of its power deficit and speed up industrialization, promising the creation of at least 1 million jobs. Moreover, to improve African exports to China's huge domestic market, Beijing is offering to entirely remove tariffs for the world's least developed countries. Let's take a listen.
China will voluntarily and unilaterally open its markets wider. We have decided to give all least developed countries that have diplomatic relations with China, including 33 countries in Africa, zero tariff treatment for 100% of their products.
Xi Jinping there. Now, it comes as major players in the global semiconductor industry are gathered in Taiwan. It's for a 3-day trade fair there.
Executives at top firms like TSMC and Samsung expressing an optimistic outlook for the sector despite a major sell-off in chip makers this week. Investors have been dumping shares over fears that the recent AI boom may be overhyped, along with the potential for an impending U.S. recession. Those acute market concerns are added to deeper geopolitical ones as Taiwan, a global microchip powerhouse, tries to navigate a changing landscape. Brian Quinn reports.
The cutting edge of microprocessing power on display in Taipei this week. This is SEMICON, a top trade show for the world's chipmakers, held in the world's top chipmaking country. It's been a rough week for the sector. Companies like Nvidia, Samsung, and Taiwan's TSMC have taken major hits to their share prices as investors begin to cool on the AI boom amid fears of a potential recession in the U.S. Executives and politicians here, though, are staying upbeat.
We hope to build an AI era with Taiwanese elements, one that is connected to the rest of the world.
Meanwhile, the country's chip industry is facing an increasingly complicated geopolitical outlook. Taiwanese production accounted for 46% of the world's market last year, a concentration that presents significant risks to the global economy. With Beijing ramping up its rhetoric around reunifying Taiwan with the mainland, Chinese naval drills have rehearsed blockades of the island. Such an eventuality would cripple the electronic supply chain. The US and the EU have been racing to boost their chip-making capacity in response. China, too, though, relies on Taiwanese supply, importing some $47 billion worth of chips last year. The industry often referred to as Taiwan's silicon shield against Chinese invasion. But Western export restrictions aimed at containing China's military tech capabilities have pushed Chinese companies to begin developing their own advanced chips, a move that could chip away at a key pillar of the Taiwanese economy.
Brian Quinn there. Stock markets then, how are they faring?
Well, in Europe, at the open, the major bourses are trading lower, continuing the trend that started this Monday, really around the world. Weak U.S. manufacturing data earlier in the week, as well as a jobs report. The reason for that sell-off, with still more U.S. data due this week on jobs specifically. So concerns there, as you can see, the Paris CAC 40 down 0.5% at the open.
Some more tech news. This is the AI chip maker NVIDIA denying a Bloomberg report.
We mentioned that report in our bulletin on Wednesday. Bloomberg's exclusive saying the Department of Justice in the U.S. had sent subpoenas demanding information to NVIDIA as part of an investigation into antitrust practices at the company. Well, in a response to that story, NVIDIA said it had been in contact with the government agency but hadn't been subpoenaed, and that its competitive advantage was the result of having superior products.
Now let's move to the US presidential election for this next story. The economy looming as a top concern of American voters.
Although Kamala Harris is slightly leading Donald Trump in national polls, when voters are asked specifically about how the candidate would handle the economy, Trump has an edge on Harris. The Democratic nominee is trying to change that and has made a number of economic pledges in recent weeks. This Wednesday, she took her campaign to the state of New Hampshire, where she outlined her plans to provide incentives to small businesses. Monty Francis has the details.
As a latecomer to the race, Kamala Harris has been rolling out her agenda piece by piece, focused on what she's branded the opportunity economy. Her latest proposal is to provide new small businesses with a tax credit of $50,000, expanding the current tax break by tenfold. The goal, says Harris, is to encourage entrepreneurship.
So I want to see 25 million new small business applications by the end of my first term. And to help achieve this, we will lower the cost of starting a new business.
Harris is also pledging to give money directly to U.S. consumers by permanently expanding the child tax credit, including a $6,000 break for parents with infants, and to give first-time home buyers a leg up by providing a government contribution of $25,000 toward a down payment. In addition, Harris has promised a federal ban on price gouging on everyday items, including groceries.
We will end America's housing shortage by building 3 million new homes and rentals.
When it comes to housing, Harris has pledged to spur the construction of millions of new homes, largely through tax incentives. Her campaign is trying to draw contrast on economic policy with Donald Trump, who wants to cut the corporate tax rate and extend tax breaks to the wealthy. Harris has not explicitly said how she would pay for many of her proposals, but has expressed support for President Biden's plan to raise taxes on large corporations and the rich, or those making more than $400,000 a year.
And in fact, we actually have a pretty much a clearer idea of what Harris's plans to raise taxes on the rich will actually look like.
Yeah, the Democratic presidential nominee is actually proposing an increase of the top capital gains tax rate that isn't as drastic as the one previously proposed by Joe Biden. That's the tax on the profits investors make when they sell stock, for example. The current rate stands at 23.8%. Harris wants to increase it to 33%, while Biden wanted to raise it to 44.6%, around the same level as what we see for ordinary income tax. Harris defended her proposal by saying it would continue to reward investment in innovation and entrepreneurship.
Thank you very much, Jean Pellegrin, with the business news, our business editor here on France 24.